Wall Street is late to Bitcoin, but the man who was creating and interested in digital money 30 years ago in the 90s just dropped a $200 trillion Bitcoin bombshell. And today we're going to be walking you through the math of what happens if Bitcoin solves this $200 trillion problem and analyze what Adam Back might know that you don't. Let's just jump straight into the clip and we will get to the math.
Is if you look at Michael Saylor's thought process, it actually applies to all the companies with large cash reserves, which is he was thinking about the inflation rate being high compared to the interest rate at that time during COVID. Now the interest rate's a little higher, but I think realistically with the amount of M2 monetary expansion, even though the inflation rates are supposedly down, we're going to see financial repression, i.e. inflation rates way above the prime rates. And so for anybody with cash or US treasuries, they're literally losing 5 to 10% a year. And so, all of the companies with cash reserve have a fiduciary duty to preserve shareholder value, and they're failing at that if they're not holding on to that cash reserve value. And effectively, over the last decade, nothing has outperformed Bitcoin. So I think in a way, the treasury companies adopting Bitcoin as part of their treasury are also using the idea that Bitcoin is effectively the hurdle rate. If you can't outperform Bitcoin, you should at least hold some of it. And, in the long run, once Bitcoin is fully adopted, of course, it won't be growing as fast because it'll be saturated. But I think it brings a prospect that, Bitcoin is the hurdle rate and you need to outperform Bitcoin slightly as an operating company, using profits to buy more Bitcoin, using that as your cash reserve in the far future. But I think in the meantime, it's effectively all the people vying to accumulate more Bitcoin via whatever means, individuals, they're selling some investment and buying Bitcoin or borrowing some against something that's unmortgaged, something low risk to accumulate a bit more Bitcoin. Is all kind of an arbitrage to accumulate Bitcoin before it gets out of reach. So I think the treasury companies are using the corporate vehicle, corporate structures they have, the bonds, the converts, etc., to use that beneficial access to capital from being a public company to do that same arbitrage. And so I think, the scalability of that arbitrage is enormous because you're talking about, Hal Finney's 200 trillion addressable market of extracting the monetary premium from all different types of assets, real estate, bonds, stock market. So I think that's the arbitrage.
Okay, you heard it there. Adam Back going into breaking down the problem, and we're literally seeing this play out in real time. And of course, I'm not alone. We are experimenting on the show today, but I got the wonder kid himself, Mitchell HODL, on the show today. One of my favorite Zoomers out there, author, as you guys know, asked Saylor this very tough question, which we will be talking about later. But before we get into that, look at this chart, guys. And we've been covering this, and I know there's a lot of skepticism around this idea of Bitcoin following global M2 liquidity, money supply. But as of now, it does seem to be lining up pretty good. And we did kind of see a little dip here, which you can see on the chart here. White is, of course, global M2 liquidity. And I think Bitcoin does have, the normal view that everyone's having, it's got about a 3-month delay on this M2 global liquidity. And we did just see this little dump here. So a lot of people have been saying if it follows this exactly as we're all kind of predicting, 125K literally in weeks is probably on the horizon. Now, diving into a couple of things that Adam Back was saying, of course, the Bitcoin treasury play. This is all the hype. If you guys saw the Bitcoin conference, there's basically 2 main themes over there. Bitcoin treasury strategies and, of course, stable coins, which we won't get into stable coins today. But the Bitcoin treasury strategy is exploding, as you can see here. TFTC tweeted this morning. Corporate Bitcoin adoption is exploding. 60+ public companies now hold Bitcoin on their balance sheet. That is 3% of all the Bitcoin now sits on corporate treasuries. And so everyone is trying to follow what Saylor is doing, and it's all based on one fundamental problem, which we've been covering on the show. If you are even a little bit interested or studying macroeconomic plays right now, there is a lot of concern in the bond market. The Trump administration is doing whatever they can to get interest into people buying bonds. It's not really working. people around the world, countries around the world are dropping bonds right now, hence why the interest rates are going higher. We saw there was a whole debacle in Japan around bonds, which is basically the canary in the coal mine here. What happens in Japan does have an effect here in the U.S. Well, the point remains the same. People are looking for alternative investments. They do not want to hold bonds right now. Everyone is scared of government debt. They are not touching it with the 10-foot pole, and every administration is doing whatever they can to essentially get more interest into people buying bonds, and it doesn't seem to be working because now we have an alternative. And remember, yesterday, I was covering Ray Dalio, who was basically saying, hey, there's a looming debt crisis on the horizon in 3 years. Probably no one's going to be touching bonds. They probably should be buying gold and Bitcoin. Now, going further, Adam Back literally referenced in the white paper, the only person referenced in the white paper in the actual 9-page PDF. Of course, there's Y Days, B Money, Adam Back, and there's some alluding to Timothy May's Cypherpunk Manifesto. But Hal Finney, the first recipient of Bitcoin, literally stated this days after Bitcoin was created. And here is the quote in question. And he goes, as an amusing thought experiment, imagine that Bitcoin is successful and becomes a dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth that I have found range from 100 trillion to 300 trillion with 20 million coins. That gives each coin a value of about $10 million. Now, of course, he's using the 20 million coin metric to get to this number. You know, round numbers a little easier to deal with in our heads. But the interesting thing, of course, this was 2009, 16 years ago. The global wealth has expanded to about 3 times, if not more, than this when Hal Finney predicted, literally days after Bitcoin was created, a $10 million per Bitcoin. Well, we have the updated numbers for you guys here. And this is the main chart I think a lot of us Bitcoiners are looking at and should be looking at. So shouts out to Croesus, aka Jesse Myers, because he keeps updating this chart. For a while, it was 900 trillion. Now his new metrics, his new math, the new graph is saying 1,000 trillion, which again, guys, I think that's 1 quadrillion. You guys make fun of me in the chat about this, but you can check it out. Bitcoin is only 0.2% of global wealth. Here you can see top left, Bitcoin at $2 trillion market cap, which we're holding up on that. And then the other markets, of course, a lot of Bitcoiners really always reference the gold market cap, which is roughly 22 to 23 trillion right now. Obviously, that is the next metric on the table where Bitcoin will overtake. Now, is that in 2 years? Is that by the next cycle? We really don't know, but it's probably coming sooner than we can even imagine, considering that Bitcoin is going mainstream, that people are looking at Bitcoin as a viable alternative here. And then, of course, we have art, cars, and collectibles, 27 trillion, equities, 135 trillion, which, of course, now Bitcoin is in there with MicroStrategy Playbook. So we're slowly eating away at that. But the real big kahunas here, which I think we can update these numbers from Hal Finney, is the real estate market and the bond markets. Of course, the money market, 129 trillion. Bitcoin will eat that as well. It'll get to those numbers. But the mass liquidity, I think, that we're seeing in the last couple of weeks that will be funneled from these markets into Bitcoin is, of course, real estate and bonds. There's a lot of talk from Bitcoiners saying that, you know, the monetary premium of houses is probably going to go down once all of these boomers, or rather, you know, I'm not going to shit on all the boomers out there, but once all the people holding real estate realize that Bitcoin is a better investment, there's no upkeep costs. You know, there's no mortgage to be paid. You literally just buy Bitcoin, you hold it, you store it, and you get that purchasing power increase. So the real estate market, according to Jesse Myers, updated is 370 trillion. And then, of course, the bond market. Now, I'm sure there will always be some people that hold bonds. Of course, there are people that are legally obliged to hold these bonds. But for everyone else, the $318 trillion bond market, I think it's safe to say that Bitcoin will eat some of that as well. And so if you add those numbers up, Hal Finney said that the numbers he saw was 100 trillion to 300 trillion of global wealth. Well, from the updated numbers, that's about what? $678 trillion just in real estate and bonds alone. if Bitcoin eats even a sizable chunk of that wealth and people start to drop government debt, aka bonds, or even drop their real estate investment properties and they just store it into Bitcoin, this $2 trillion market cap of Bitcoin is going up. So I know a lot of people keep asking us and keep telling us in the chat, like, you guys are going hard on these clickbait predictions. $10 million Bitcoin isn't coming. $1 million Bitcoin isn't coming. Can we just get to like 200K first, bro? Well, I feel that sentiment as well. But I think a lot of what we do as Bitcoiners is we do project down into the future and we look at where the puck is going. And as you can see, there is a ton of money either being parked or sloshing around, and it's all going to find a home soon enough. As the narrative is shifting, as we've seen literally in the last weeks with this tide shift, the sea change going on, people are looking at Bitcoin as that viable store of value. Of course, we think of it a little more. It's perfect money, pristine collateral, which we will be talking today about in the news. That capital will find its way into Bitcoin as more and more institutions, banks, nation states, and of course, really influential people start to embrace Bitcoin. I think these watershed moments, it will happen very suddenly. We are seeing the gradually then suddenly meme play out. And me and Mitchell were talking about this before the show. Like, it's been gradually then suddenly with these news stories, and it really does feel like we are on that suddenly point right now. Now, the price will follow soon enough. Of course, we just recommend buy Bitcoin constantly, weekly, monthly, bi-monthly, however you do it, whatever your finances allow. You just need to set up some form of a dollar cost average strategy. Take that Bitcoin into custody. Of course, don't leave your Bitcoin on exchanges and enjoy the ride. It's literally that simple. It's almost too simple for people to fully wrap their head around because we're so used to these intense, crazy financial engineering strategies to just maintain inflation costs here. It is getting crazy. And I know we're throwing out big numbers on the one hand, of course, to get people to watch the video. But when you really look at the math, as Arthur Hayes was saying at the Bitcoin conference, the math is easy. This is easy math. It's all mathematical. At a certain point, it will find its way into Bitcoin. And you are early, as we've been saying. You know, Wall Street was late to Bitcoin. Yes, now they're getting into it 15, 16 years down the line. But the majority of Bitcoin is held by individuals. So for once, you know, the bottom, the people can win with this new monetary, standard, with this new monetary regime that will be built on Bitcoin. It's happening right now. It's exciting, man. It's exciting times to be a Bitcoiner. Anyways, I've rambled enough. I went over all the source material. Mitchell, you want to unpack some of this? And thanks for coming on, man. You're one of my favorite Zoomers out there.
Thank you, Opti. Appreciate you having me on the show and all the kind words. Fantastic intro. There's so much we can dive into. I think one thing I'll focus on first is the Bitcoin treasury companies. They get a ton of hate in the Bitcoin community. But when you talk about this 900 trillion, this 1 quadrillion worth of capital, worth of liquidity getting into the Bitcoin market, how do people think that's actually going to happen? Because it's physically and technically impossible for 8 billion people to take self-custody Bitcoin on chain and move it once a year. And so you need vehicles like Strategy, like 21, like Strategy convertible bonds, like Bitcoin ETFs to allow that capital, that liquidity to actually get into Bitcoin. And so we've heard Bitcoiners talk over and over for years about Bitcoin capturing that pie, capturing its slice of that 1 quadrillion. And so you can't complain when the actual means by which that happens is entering the market. And like you said about Bitcoin 2025, Bitcoin treasury companies were the talk of the town. That was by far and away the highest signal thing for me personally. And there's a reason for that. They're here, these institutions, you can't stop them. Bitcoin is permissionless. You can't stop Wall Street from embracing it and using it as a store of value. And so I think we're early from a price standpoint, but I don't think we're early from a time standpoint. I think we are hitting that suddenly phase just simply by the velocity of announcements, the velocity of new players in the market. At the start of the year, there was about 75 public companies that held Bitcoin on their balance sheet. Now it's about 125. So that's over a 50% increase in just 6 months. So I think we're going to continue to see that rate accelerate. And the troubles in the bond market globally, all the chaos geopolitically, all that stuff is just going to continue to compound and accelerate the rate at which everyone in the world, everyone with capital they want to save, starts to park that into Bitcoin.
Yeah, it really does feel like Bitcoin was designed for this exact moment. And anyone that doesn't see that, you're like, what are you looking at? It's so obvious to us. But again, it really just goes to there is a learning curve to Bitcoin, or rather an unlearning curve here of Bitcoin. You really have to forget everything you've learned before in traditional finance to fully understand what Bitcoin's potential will be. And, I don't mean to do the saying of you can't teach old dogs new tricks, but it seems like a lot of people are stuck in that system. And actually, Mitchell, you brought something up that we were talking about before the show. And it's the idea of, I know there's been a lot of pushback on the Bitcoin treasury strategy. A lot of Bitcoiners are saying, man, the institutions are here. We're losing our cypherpunk ethos. We even had a bunch of articles. I saw a new one this morning from Wired. We have Wall Street Journal talking about, Bitcoin crypto bros embrace MAGA. Are they losing their ethos? And we were kind of trolling about it earlier before we started the show. It's like, guys, did you think that this was going to happen any other different way? Like the way that Bitcoin gets to these astronomical numbers, for better or worse, is by piling into, or rather, siphoning capital from these enormous capital markets. I think this was all planned from the beginning. And as Hal Finney even kind of predicted the very beginning of Bitcoin will become a huge part of the global wealth right now. We're seeing it play out in real time. And a lot of people are sitting back and like, it kind of reminds me of the Matrix meme, like, not like this, bro. It wasn't supposed to happen like this. And we were joking, like, how do you think this is going to happen? You think it's going to be 8 billion, everyday people putting in $1,000 that's going to take Bitcoin to these crazy numbers? Is like, no, you need to find a way for these huge capital markets, the normal capital markets, to get into Bitcoin. And this is what we're seeing happen right now, again, for better or worse. And I think it's upon us as Bitcoiners, everyday Bitcoiners that talk to people, that create content, to basically be like, look, if you want the Bitcoin ethos to maintain and continue, it's about taking Bitcoin into custody. This is the revolution here. Yes, we will get wealthier. Yes, we're seeing, Donald Trump, and I might bring this in later, talking about eliminating the debt ceiling. Like the big print is on the horizon right now. This was how it was going to play out ever since the beginning. I think, I don't want to put words in Satoshi's mouth, but I think this is what we knew was going to happen. Bitcoin was eventually going to be that Trojan horse that overtakes all of the capital markets. And it may not be exactly how we kind of dreamed it up to be, but this is how we win this game. I don't think there was any other way of doing this.
No, there wasn't. The plebs dollar cost averaging $100 a week was not going to get Bitcoin to $1 million. African countries using Bitcoin as a medium of exchange to send €5 or $5 worth of productivity a day wasn't going to get Bitcoin to these astronomical numbers. And so that doesn't mean Bitcoin's not going to change the world, right? Think about who is going to benefit the most from all of these institutions piling into Bitcoin. Well, it's going to be the Bitcoiners that have been dollar cost averaging, stacking, and taking their Bitcoin into cold storage over the last 4, 8, 12 years. There's going to be a massive transformation of capital. And as Bitcoiners, as we get wealthier over the next 4, 5, 6 years, we have to decide how we want to impact the world, how we want to allocate our capital. I think a great example of this is Steak and Shake. They were at the Bitcoin conference. They're going all in on Bitcoin. They're going all in on beef tallow, ditching seed oils. This is the kind of world that Bitcoiners can create. When you have wealth, you can choose how to allocate that and you can reflect your values onto the world. So I think we're going to see a lot more companies take the Steak and Shake approach and say, hey, Bitcoiners have all this wealth. We want to appeal to them and their values. So we're going to restructure our company and our products to do that.
Yeah, 100%. And I mean, further to your point, again, I know a lot of Bitcoiners don't like politicians, but we're seeing politicians do this exact playbook. We just got the new news this week of the South Korean president basically being elected because he's pro-Bitcoin. again, and Nico got mad at me yesterday because I said we will co-opt the system, and he's like, by legal, governmental standards, by legal social contracts. I'm like,
Right.
yeah, that's exactly by incentives. Bitcoin is proving that this movement is huge, and I actually saw a good tweet by Eric Cason this morning, or I think it was yesterday, and he basically said, "Sorry, Bitcoin bros, like Bitcoin is political, whether you like it or not. Money is political, and here we are. We're starting to prove in real time that the incentives of Bitcoin, whether it's Stake and Shake, whether it's politicians, whether it's the Larry Finks of the world, they have to embrace Bitcoin. They have to get off zero. They have to play the game, or else they get left behind." And I think the biggest news story of this that we will cover later today in the show is what's happening with JP Morgan. Literally the biggest bank in the world is now bending the knee to Bitcoin. And they're saying some very interesting things around Bitcoin that I wasn't expecting this cycle, or rather this year. I thought this was going to be down the line, but it's all pointing to the same thing. Bitcoin is legitimized in the eyes of everyone around the world. And for better or worse, I think this is a great opportunity for us to all capitalize on this. Continue to stack Bitcoin, continue to save in Bitcoin, continue to spread Bitcoin, and of course, take that Bitcoin into custody. Like, this is how the game is won. And I know Nico goes kind of hard on this is what winning feels like. And I you guys can see me kind of cringe on the show sometimes. But I think it's pretty safe to say, like, we are winning pretty hard right now. And the only thing that's going to prove this next is, of course, a huge Bitcoin rip. And I think this is what we're all waiting for. And Mitchell, you actually had some wise words on this, because I was kind of trolling before the show. It's like, all this good news, when's the price ripping? And what did you say, Mitch?
Soon, within the next 6 to 12 months, I think we're on the precipice of a massive move. You did show the global M2 liquidity chart earlier, and it's so cliche and people love to mock it, but fundamentally it makes a whole lot of sense. Yeah, this one. Thank you for pulling it up. And shout out to Joe Consorti. His handle's down there on the bottom. He's been promoting this signal for a long time. It's really quite simple. Bitcoin, the price of Bitcoin is a function of fiat liquidity and adoption. And when there's more units of currency in the system, investors and capital allocators, they're not going to hold those dollars. They're going to purchase hard assets. And Bitcoin is the most liquid sponge for all of this liquidity. Why? It's traded globally 24/7, 365. It's perfectly liquid, fungible, portable, and it has a finite supply, and it's a neutral commodity. No one institution or government is in control of it. So it's natural that when there's excess fiat liquidity in the system, it's going to find its way into Bitcoin. And I think, the only way I believe this chart can kind of break, so to speak, is to the upside. So if you take liquidity and you have Bitcoin, the more bridges you make connecting the two of these. So what's a bridge that can connect liquidity from fiat to Bitcoin? It's a Bitcoin ETF. It's a MicroStrategy convertible bond. It's something like a Bitcoin-backed mortgage or something to draw capital from the real estate market. The more of these bridges we get, that's more Bitcoin adoption, and that allows that liquidity in the fiat system to get to the Bitcoin system even faster. So I think we're gonna really start to see the Bitcoin price rip over the next, I think, the next 2 quarters. I think by the end of 2025, we're going to be sitting a lot higher. And again, my perspective could change as the data changes, but I do think liquidity is the #1 indicator for Bitcoin price action.
Yeah, actually, that's one of my new favorite metrics, and it does seem to have just popped up recently. I know we talk about Bitcoin in regards to the 4-year halving cycle lining up to the presidential elections in the U.S., and I'm sure that the conversation around global liquidity was kind of like a thing around Bitcoin Twitter, but in the last couple of weeks, it popping up and it's becoming more of a mainstay. It really just makes much more sense than anything else. Essentially, the Bitcoin price goes up when there's more liquidity, global liquidity in the system. And as we've seen, the money printers are being turned on. There is stealth QE going on as we speak. And I don't know if it's just because we're Bitcoiners and this is what we follow. We're all financial nerds, economic nerds here. And this is us. This is our Super Bowl is when we see this kind of news. But it's all pointing towards the big print is coming, as Larry Lepard said. They are going to print in obscene amounts of money to continue to maintain the fiat system, and that has to find a home. And as we're seeing, as inflation goes up, as bond interest rates goes up, people don't want the traditional store of values. They do not want the traditional risk off investments or, speculative vehicles. They're starting to look at Bitcoin. And it's only a matter of time until these really deep pockets just go smash by. So you said, global liquidity will drive Bitcoin. There's only a few things that will drive it. I'm still kind of, 45 IQ. Bitcoin will drive off narrative base, hype and FOMO. And once we finally see that FOMO play in, and that really accounts for a lot of retail investors coming in, like this could totally blow past global M2. And, I'm here for it. Like, I'm totally here for it.
I absolutely think it could. And my kind of baseline thesis is that we don't get any more bear markets. We don't get any more 75% drawdowns. But if this retail FOMO kind of cycle starts to come in and we go to $1 million in the next 6 months, yeah, we're probably going to drop back down a good chunk, right? And so I could see that retail FOMO cycle playing out of, liquidity and adoption drives Bitcoin to 150, 200, 250 over the next few months. Then you could start to see the retail folks piling in. But I will caveat that by saying retail's kind of broke right now. Like people they're being hurt really hard by inflation.
I don't mean to laugh, but it's so true.
It's true, right? Retail was able to bid the Bitcoin price in 2017 because Bitcoin had a really low market cap. So you didn't have to have a lot of capital to move the price, relatively speaking. And then in 2021, they just got a fresh stimulus check. There was all this new units of currency in the system. And as it currently stands, retail's up to their neck in credit card debt. They have 4 roommates and they can barely make rent. Like, I'm not sure how much they could actually move the needle, but it could certainly happen.
Yeah, 100%. And I think that is the other thing that we are seeing. Of course, we've been covering the bond market and, of course, the interest rates. And we've seen this whole, you could argue fake fight between Trump and Jay Powell right now. But the point remains the same. Like, the free money era is over. And we are entering into this hard money asset, as I was saying, or hard money era, as I was talking about yesterday. And if you aren't parking your wealth in hard money, you're going to be left behind. But there's still a lot of people right now that are hurting, that are struggling, can't pay their, rent, they're living paycheck to paycheck. Groceries are getting more expensive. We have shrinkflation as well as inflation. So what you buy, your dollar doesn't go as far as it used to. Like, people are struggling. And I think a lot of Bitcoiners are, most of us are probably in the opposite boat. We're like, look, man, like, yeah, inflation's getting out of control. They're going to destroy the purchasing power of the middle class. But we got Bitcoin and we're kind of chilling. And we forget what it's like to be on the other side of the aisle because we're on the safety boat. And that is the truth. People are hurting right now. And it's becoming clearer and clearer.
Right. They're living in an entirely different world, right?
Yep.
If you've been saving in Bitcoin, you don't have inflation. You have purchasing power go up. Your life gets cheaper over time. And so it can be difficult to kind of get your mind back into the normie state where it's like, man, my groceries and my rent, my car payments, all getting more expensive when they're saving in the currency that loses purchasing power.
Yep. As the saying goes, you got to switch your monetary standard and get on the Bitcoin standard. This is the way. All right, guys, before I move on, I want to remind you to smash the like button, hit the subscribe, and of course, comment on the show. Are we, are we lost in the sauce here? Are we all up in the hopium, or is it possible for Bitcoin to get to these 10 million plus price predictions? I think it's easy. I think it's a super easy. It's easy math, guys. All right. Before we move on, though, I have a message from our boys over at Bitcoin Well. If you want to stack Bitcoin the best way, the safest way, you need to sign up to Bitcoin Well. Go to bitcoinwell.com/simplybtc. The reason we love them is because it is self-custody by default, which means you need a Bitcoin wallet to buy Bitcoin from them. They are, I believe, the only non-custodial exchange on the Northern Hemisphere, which literally means they never hold your Bitcoin. You give them your fiat, they send you the Bitcoin, it goes straight into cold storage. You hold the Bitcoin that you buy from them. There's never a chance of getting rug pulled. And of course, when you sign up with Simply Bitcoin or our promo code, you get 3 tosses into the wishing well with a chance to win up to 1 million sats, which I think it's about, $1,000+ right now. So, hey, there's a chance to win. And I've been trolling Adam a little bit. I'm like, has anyone won the million sats yet? It's like, no. Well, the odds are decreasing here. Someone has to win that million sats soon enough. Anyways, let's get into the numbers, guys.
I want to tell you guys about our sponsor, Stamp Seed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stamp Seed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to HODL your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stamp Seed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, guys and gals, I'm over here on Clark Moody's dashboard. And of course, we're going to go over some numbers. So the current Bitcoin price is $103,440. Is everyone in the chat saying it looks like the market makers are trying to liquidate James Wynn right now? I don't know if you guys have been watching that saga, but it's getting crazy over there. It's pretty interesting. He's just going, $100 million longs, and looks like they are looking for the margin call. It's nuts. We'll see what happens. Obviously, Bitcoin's not over. It's only a decline of, 0.7 or negative 7.6% from all-time high. The sats per dollar is still under 1,000 sats, 967 sats per dollar. The block height, 899,925. We have still held the $2 trillion market cap. We're currently at 2.06 trillion. We're still inching towards solidifying that 10% of the gold market cap. Currently, it's at 8.62%. And the total percentage of Bitcoin that will ever be issued is currently at 94.64%, with roughly 19.87 million coins in circulation. And the realized monetary inflation, just the hardest money ever, is at 0.84%. Nothing can come close to Bitcoin. Okay, so I saw this interesting clip here from Tom Lee, and personally, I'm not the biggest fan of Tom Lee, but I think he does lay out a good kind of perspective in this clip. And of course, he's on the corporate press. Shouts out to Joe Kernan over at Squawk Box. He's the GOAT. He's probably the best Bitcoin podcaster in the game. He's constantly pushing back. And even he was kind of shook at what Tom Lee is saying. And as the framing goes, of course, it's this whole fabled supply shock. Now, there is some pushback on this idea of supply shock, so I will kind of go into it a little bit. But let's just watch the clip, and then we'll break this down.
95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your 150 target?
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's, I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, Bitcoin could be 2 million, 3 million long term. Even higher.
Incredible. Okay, actually, before I pull this chart up and explain it, I do want to comment on Joe Kernan when Tom Lee's like, Joe's essentially like, 150 seems reasonable. And Tom Lee's like, you know what? I think 200, 250K is probably where we're going. He's like, wait, what? Like, what are you talking about? And I mean, Mitchell, actually, I'll pose this question to you because this was kind of the sentiment I was getting at the Bitcoin conference talking to everyone. It seems like a lot of people are eyeing that 150 price prediction, that 150K per Bitcoin price as like a given here, or rather not even just a given, but the top of this cycle. And I don't know if you guys saw Safety, and he did a good interview on the Roxham TV, or actually it was with Natalie Brunell, but it was at the Roxham TV booth. And he was saying, look, I know 150K doesn't seem as great as we would like for a blow off top parabolic run of Bitcoin, and it can potentially go higher. But if you really count the price gains from the bottom of this cycle, 15K to 150K, you know, that's a 10x move here. And that would kind of break this diminishing return memes that we've been seeing for a while. But, you know, Tom Lee's out here like 250K. What would that be? Is that like a 20x? I don't know. Math is hard from the 15K bottom. So
that's a lot.
I just want to ask you, Mitchell, did you also get that sentiment from Bitcoin conference that a lot of people are eyeing that 150K price as kind of like the general, you know, prediction of where we're going? That seems like the safe prediction right now.
Yeah, I would say so. That's definitely the conservative estimate. I think near term, you know, 6 to 12 months, the range is probably 150 to 250 realistically, unless we get some kind of black swan mega giga print like 2020. But people are saying, you know, Bitcoin at just 150,000. But like you said, not even 2.5 years ago, we were at 15K. And if you've been dollar cost averaging and accumulating Bitcoin every single day, you're going to do just fine. And you also have to put yourself in the mind of the institutional fiat world, because that's who's going to drive the price higher, like we've been talking about. And for them, us going from 90K at the start of the year to 150, they don't make that kind of returns in a single year ever. That is like crack for them. And so I could see us getting some kind of resistance around, you know, the 150 mark, see some reaccumulation from long-term holders, maybe trade sideways for a couple months before moving higher. Honestly, my base case is like stairway to heaven, as Cosmonaut on Twitter calls it. Bitcoin goes up 50%, Wall Street takes some profits, we consolidate, Bitcoin goes up another 50 to 100% endlessly and forever until we're at millions of dollars.
Let's go. So, hey, Mitchell, it sounds like you're saying you don't believe in the 4-year cycle anymore.
No, I don't. I think it's
actually, you've been doing videos about this. Maybe let's break this down a little bit.
Right. So like we mentioned earlier, I think Bitcoin is very much liquidity driven. And even on an elementary level, the halvings and their impact are diminishing, right? So we went from 900 Bitcoin a day to 450. In 2028, we'll go from 450 to 225. And so that marginal difference in the supply issuance is going to have less of an effect. I think the only effect really will be kind of like a psychological effect. People saying, oh, you know, look, after 2012, 16, 20, Bitcoin increased a lot because of this halving. But I do think it is more liquidity driven. And also, given the institutional players starting to girth into the market, I mean, you think Larry Fink's going to see a 30% Bitcoin dip and not back the truck up, right? Like, these are capital allocators with a lot at stake. You know, BlackRock wants to rake in fiat denominated fees on a high Bitcoin price. There's a lot of incentives and a lot of players with big wallets who won't want the Bitcoin price to dip 75%. And at some point, it becomes too big to fail, right? Think about it this way. If MicroStrategy, they hold a lot of Bitcoin, if they're in the S&P 500, the NASDAQ 100, and some other Bitcoin treasury companies are in there, a drop in Bitcoin is going to mean their stock price drops, which means the entire market drops, which means, all these boomer retirement portfolios drop. It could become that point where, like, hey, the Bitcoin price, we can't let this drop too much, or economic activity is going to really grind to a halt.
Wow. I would love to see some, price manipulation from the institutions on the downside and not necessarily the upside. I am all for this. Though I saw this metric and I didn't get enough time. I was literally right before I was coming on the show, so I wasn't really able to fully, dive into it. But it does look like a lot of customers with the IBIT ITF are selling or, basically, I wouldn't say redeeming, but moving some liquidity around. So it did look like BlackRock was selling, but it's the customers that are obviously probably locking in a little bit of gains here. And I think this might be kind of a good sentiment or temperature reading of how these institutional, or rather more retail institutional investors are looking at Bitcoin. So, there's still a lot of open books here and open ideas of how this stuff's going to work out. But I am also starting to feel that the 4-year cycle, I really don't have much data behind it. It's just more of like a intuitive take on this. But with all this news, the 4-year cycle, I just, I could be wrong. I was going to say, Safe Dean is saying we might be seeing still 70% corrections. I don't know, man. It feels like the 4-year cycle is dead.
Yeah, my vibes indicator is telling me the same thing. And to your point, the investors holding the BlackRock ETF, they're not stone cold diamond hands. They are of the TradFi mind. They like to rebalance. So when their 5% Bitcoin position balloons to 10 or 15%, they're gonna quote unquote take some fiat profits. Now, anybody who's been in Bitcoin long enough knows that Bitcoin in self-custody cold storage is taking profits. That's the only thing that you can hold reliably for the long term that can't be confiscated from you. But the newer market participants, they don't understand that. But it'll work in the inverse, right? If their 5% Bitcoin position is a drawdown, it becomes 3%, they'll pack their bags and allocate some more capital to it. So I think, Bitcoin will remain volatile relative to the S&P 500, treasury bonds, gold. It'll be the most volatile asset class in the world. But I do think the volatility will dampen from what we've seen historically.
Yeah, I couldn't agree more. All right, guys, before we move on, though, I did pull this chart up, and I do want to hit on it real quick. Because if you listen to what Tom Lee was saying, and this does kind of relate to the beginning of the show where Adam Back is saying, Bitcoin is solving a $200 trillion problem here. The sentiment around Bitcoin is starting to change. We see Ray Dalio and others basically say, hey, look, there's a looming debt crisis. And if the government doesn't figure this out, or Elon Musk, if Congress doesn't figure out this spending problem, we're going to see a problem. And you probably want to own this Bitcoin. And how Tom Lee said it is in the next coming years, you're going to see a potential outsized demand and interest for Bitcoin. And of course, there's only a 21 million total supply. And a lot of the memes right now is like, oh, the Bitcoin on exchanges is going down. There's only 2 million Bitcoin on exchanges. Or the metric he used, 95% of the Bitcoin is basically in individuals' hands. Well, I'm over here on CoinGlass, and you can see the Bitcoin on exchange balance. And to that point, a lot of people have been pushing back on this idea of supply shock. But you can see that the balance on exchanges since March 2024 has dwindled from 2,696,000 Bitcoin down to 2.1 million Bitcoin. So, hey, 500,000 Bitcoin have left the exchanges. And I think it's safe to say that will most likely not find its way back to exchanges. It looks like the institutions, the corporate treasuries of the world, they're holding this for, long term here. So will we see this number finally drop under that 2 million Bitcoin on exchanges? I don't know, but it is all pointing towards one thing. There is an outsized demand that is going to meet a hard cap supply currency or money here. Things are going to get crazy. It's an inevitability. And I am starting to feel like this cycle is going to be elongated a little bit. Again, just vibes trading here, intuition based, but it's starting to feel like we might be seeing this year's cycle go into 2026. And I know that doesn't necessarily break the 4-year cycle, but it does kind of start to change the dynamics. If these bull runs and these halving cycles, well, they wouldn't be halving cycles anymore, but if these bull run cycles from the dip, the bear markets to the bull markets start to elongate to 5, 6, 7 years, maybe it's going to be, as Mitchell was saying, the halving won't have the effect it has anymore because it's less Bitcoin that's coming into the market. Most of that Bitcoin is being held by people, individuals, corporations. So we might be seeing a new dynamic. I don't want to go all this time is different because I did that like a couple months ago and it was like, okay, I guess maybe I was ahead of the gun. But one day I will be right. A broken clock is right twice a day. It is coming, guys. I swear it has to.
Well, right. The way I look at it is the biggest source of sell pressure on Bitcoin is not from miners covering their operating expenses. It's from people that bought Bitcoin at $1,000, 5,000, 10,000, and they want to buy a house or a Lambo or a yacht, right? It's those who've been holding on to Bitcoin for a long time. And you could see this on chain. You could see some of the older coins moved when we hit 70K in March of 2024. They moved again when we hit 100K in December of this year. And over the last 6 months, we've seen a reconsolidation, kind of, setting the base level here at 100K. So I think we move higher and we'll see some older coins start to move again.
Totally, 100%. And I don't know if you saw the Willy Woo tweet, but he's saying, some of these mega whales have basically been selling it for years now. And these addresses with 10,000 plus coins, they're on the market selling. And then let's not forget, Germany sold 50,000 coins. We still don't know what's going on with the US's Bitcoin. Maybe they sold that stuff. So it's starting to become very clear. I know a lot of people are like, who's selling this Bitcoin? I think we have enough data points to show a lot of Bitcoin has been sold, hence why the price is going down right now. Well, it's really not even that down. We're still above 100K, and we're like, the price is going down, man. It's over here. But yeah, it's getting interesting, and something has to give soon enough. And on that point, something having to give. We saw JP Morgan bend the knee yesterday. They've been bending the knee the last couple of weeks. And I think this might be one of the bigger announcements of them bending the knee. And it might not be for the perspective that you think it is. So let's cover this news story. And then, of course, we're going to talk to Mitchell about the infamous question he asked Michael Saylor. This guy's got some balls on him. All right, guys, let's get to the news.
I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io.
I want to give a shout out to our partner, CoinKite. If you take your Bitcoin security seriously, you'll need the best Bitcoin hardware wallet on the market to take self-custody. That's where Cold Card comes in. The Cold Card Q is the most advanced Bitcoin signing device ever made. It's got a full keyboard, larger screen, and NFC support, making air-gap signing easier than ever. It's built for power users who want the ultimate security without sacrificing usability. And if you're looking for a battle-tested, uncompromising cold storage, the Cold Card MK4 is your go-to with PSBT signing, an industrial-grade secure element, and USB-C. It's the perfect blend of security and convenience. Both devices are, of course, 100% Bitcoin only, open source, and built by Bitcoiners for Bitcoiners. Secure your Bitcoin the right way with the Cold Card Q and the MK4. Head over to coldcard.com today and use promo code SIMPLY to get 5% off anything on the store.
All right, guys, I don't know where Nico's Q is over here, but if you want to call the bluff on the exchanges, make sure you buy yourself a Cold Card. The Q is beautiful. Scan the QR code here and use the promo code SIMPLY for 5% off. I was looking for it. I thought he had it right here.
Dude, your ad reads get me so hyped. I might have to go get a Q right now.
There we go. Testimonial, guys. So for everyone hating on the ad, go buy yourself a Cold Card. This is the way. All right, guys. Anyways, enough trolling. Let's get into this news. So I think you guys all heard about this on Twitter. If you're not obsessed with Twitter like us, you obviously didn't hear about this, but everyone was kind of framing this in the regards to loan, but I think there is something that is being missed, and a few people did hit on this. So just kind of breaking the news, JP Morgan will now offer loans backed by Bitcoin ETFs. And here is the Bloomberg kind of perspective, because JP Morgan plans to offer clients financing against crypto ETFs. Now, the first point is just kind of, explaining it. But I really want you to emphasize and pay attention to the second point, which I think is the bigger point here. So the first one is JP Morgan Chase & Co. will allow trading and wealth management clients to use cryptocurrency-linked assets as collateral for loans, starting with BlackRock's iShares Bitcoin Trust. And as this guy said, he's like, relax, it's just margin like every other broker already offers on IBIT. True. But this point, I think, is probably the vibe shift, the sea change we're seeing. Of course, this is JP Morgan, one of the biggest banks in the world, if not literally the biggest bank in the world. When Jamie Dimon does something, the world listens, as I've heard through the grapevine. Jamie Dimon likes to say that he runs countries and he owns presidents, or rather, he owns countries and runs presidents. Either way, it works. Now, this is the point that I found the most interesting. The second bullet point here, the bank will also consider clients' crypto holdings when assessing their overall net worth and liquid assets similar to stocks, cars, or art. And of course, the changes will apply to all of the bank's clients globally, spanning multiple levels of wealth, and come as big banks respond to client demand in a more favorable regulatory environment. But I want to reread this. The bank will also consider clients' crypto holdings, or rather Bitcoin holdings, when assessing their overall net worth and liquid assets. This is a huge change from what we've seen in the past. And as Zero Head said here, they tweeted this in 2024 of November. Bitcoin is about to become safe collateral. Cantor Fitzgerald is discussing receiving support from Tether for its planned multi-billion-dollar program to lend dollars to clients who put up Bitcoin as collateral. And following up today, it goes, and there it is. For JP Morgan, Bitcoin is now safe collateral. This is huge, guys. This is absolutely huge, major news. But I love that second bullet point of essentially, hey, now, and then again, maybe you don't like banks. Maybe you don't like JP Morgan. Maybe this whole thing was spawned out of the 2008 financial crisis. But now this goes into the narrative and more of the theme that we're kind of see start to, rear its head and pop its head out of the sand here. Is JP Morgan is going to look at your Bitcoin now as a total of your net worth. It's no longer just, a toxic thing you hold. It's no longer going to work against your credit score. Obviously, this has to ripple through the markets. But I think this is a huge, huge move, or rather a huge point in the adoption of Bitcoin. Again, of course, I'm not the biggest fan of banks here, but Bitcoin is now safe collateral. And if you listen to the CJ interview I did with him at Bitcoin 2025, Saylor's been saying this. They're all saying something similar. Bitcoin is pristine collateral. And now the world's waking up to this. JP Morgan just, put the stamp of approval out there. Bitcoin is safe collateral out here, guys. If you hold Bitcoin, hey, all of our net worths on paper just went up because they just counted our Bitcoin. Maybe we are the new elites here. I don't know. Who knows what's going on here? But Mitchell, what's your thoughts hearing this statement from JP Morgan?
Bitcoiners are the new elites, and JP Morgan Chase and all these other banks have to play ball. They have no choice. In early of 2024, Jamie Dimon was at Davos for the World Economic Forum, and he's calling Bitcoin a pet rock. Meanwhile, behind the scenes, he's cooking up this product. They're an AP on the Bitcoin ETF. So you got to look at what they're doing, not what they're saying. And yeah, Jamie Dimon, he could kick rocks, right? He's been going on these shows for years, bad-mouthing Bitcoin, saying all this stuff. And like you said, people take his word as gospel. He owns, the banking system. They run the world. He does own presidents and probably makes a lot of moves behind the scenes. And so at the end of the day, these are enemies to Bitcoin, but whether we like it or not, we can't stop them from participating. And it really is just a matter of incentives. Bitcoiners are becoming wealthy. They want to profit on anything and everything. And so they're going to come up with a gajillion clever ways to try to get your Bitcoin, to try to get you to voluntarily move it out of self-custody. I think we're heading to a world where you'll be able to deposit your Bitcoin into a bank, give up custody, and in exchange, you can borrow against it at SOFR +1 or SOFR +2, right? There's going to be a lot of tasty, yummy, juicy carrots at the end of the stick. And the challenge for you and for all the listeners is, Can you hold on to your Bitcoin in self-custody despite all of that?
Yeah, Mitchell, I'm glad you brought that up because that was one of the things I wanted to bring up as well, is this idea of, guys, if you take anything from the politicians, the nation states, and the institutions coming into Bitcoin, or the Bitcoin treasury strategies right now, whether you like them or not, the biggest takeaway is they want your Bitcoin. They are doing whatever they can to incentivize you to give up those keys so that they either hold it themselves or that they can profit off of this Bitcoin. This is why we constantly tell you, just keep it simple. Buy Bitcoin, store it in your cold storage, go live your life. The best way for them not to get their grubby hands on your Bitcoin is you don't give them your Bitcoin, guys. So as much as they're incentivizing us to give them our Bitcoin, we'll take the stamp of approval. You know, I think this will be, right now it's probably a little under the radar, but for the masses out there, that the fabled masses coming into Bitcoin, these are more legitimizing points for people to kind of start to grab, kind of revolve their minds around this idea that, hey, maybe I do need to buy some Bitcoin. Hey, if Jamie Dimon's out here like, oh yeah, hey, we'll sell you Bitcoin, at Morgan Chase. We'll take your Bitcoin as collateral. It's starting to sound like Bitcoin is literally a macro asset now. I think it's safe to say we've been completely legitimized. The only next move is just the price running up and then the FOMO train catching on and like, all right, guys, we're here. We made it. The Trojan horse into Wall Street is here. And then the next thing is like just funnel all that capital into the Bitcoin market cap. And I don't know, maybe, we were joking earlier, Mitchell, maybe it is game over in maybe in 3 years, maybe it is game over. I don't know. I was thinking 8 years, but
I mean, there's too much momentum right now. There's so much momentum. And, if you just look at it from a lender's perspective, Bitcoin is perfect collateral. It's the only thing that's mark to market 24/7, that you can have joint custody, that's transparent. You can liquidate at any time. Like, you're trying to borrow against someone's house and then the real estate market crashes and you can't exactly sell the collateral and all this stuff. Like, yeah, that's just historically been a headache for institutions. It's like, hey, I can lend money and I can take, Bitcoin 50% LTV as collateral. If I need to, if they're not paying back the loan, boom, sell the Bitcoin. Lender is made whole, zero risk. And as a buyer, you don't need a credit score. I don't have to have a good credit score when I can say, hey, here's this Bitcoin as collateral. Like, that is the credit score. That is the proof. There's capital right here that backs this loan. So it is the perfect financial instrument, and it was inevitable that it would get used in this way.
Yeah, totally. I think I'm speaking for every Bitcoiner here. Who's got a good credit score, bro? What is this? What is this credit score thing? I haven't looked at my credit score in years, and I'm pretty sure it's not that good. I gotta get an apartment soon, and I'm like, I still have to get my mom to co-sign. We'll see if I even get an apartment here. Your boy's credit score is done, absolutely wrecked. But we have the best collateral in the world, of course. That's Bitcoin. All right. Let's get into the spicy, fun topic to wrap up the show. Mitchell HODL asking Michael Saylor proof of reserves. And we'll talk about the backlash and the community response to that, because it got a little heated very quickly. So let's do the last transition and we'll talk with Mitchell HODL.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending. With transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledin is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledin.io today.
All right. Before we talk to Mitchell, I love this comment here. A credit what? What is this thing you're talking about? All right. Anyway, Mitchell, we're not going to play the whole video, but I do have here for reference, Mitchell HODL at the Bitcoin conference. You kind of made, I think this might have been your most viral moment here, bro.
Easily.
You got up there. You were telling me at the conference, you're like, man, I was so nervous. I don't know if you can tell. You're like, what was I thinking? You went up there and asked Saylor about proof of reserves, and his response, you could say it was, is maybe missing the Bitcoin ethos, but it was lackluster. And you're at the heart of it. And we were trying to get you on the show during our Rumble coverage here, but we couldn't deal with the chairs, so we're doing it now, man. First of all, how'd that feel to ask Saylor, bro?
I was definitely shaking. I mean, I had a chance to ask him a question. I knew, man, you're probably never going to get another opportunity to do this again. This was a pretty private, intimate event. It was run by Bitwise and Bitcoin for Corporations. And so you can imagine this is like the Saylorist of Saylor fanboys, like his groupies and everything, all his lovers there. And for some reason, the only question that came to my mind was one that's kind of antagonistic and a bit of a hot button issue. But it's personally the number one thing I wanted to know. I'm a strategy shareholder. I like what they're doing. I think they have all the Bitcoin, but I just had to do it, had to ask him. I was a little nervous, and I was overwhelmingly surprised by how adamant he was against proof of reserves. And it definitely sparked a lot of debate, and I've been able to learn a lot. It's a bit more of a nuanced issue than I thought it was originally. So we can dive into all those nuances.
Yeah. I mean, I'd love to. I mean, you were ground zero for this, this question. So what have you learned since, you asked that question? Because obviously, from a Bitcoiner perspective, and well, first of all, we have seen some responses from some very big companies in the Bitcoin space, just being like, here's proof of reserves, bro. But I think there is kind of some nuance here that I think a lot of us Bitcoiners either we're just not kind of familiar with. There's obviously, he's playing a different game than we are, and we're just kind of, toxic Bitcoiners like, yo, bro, just show me the corn. Where's the corn, bro? So what have you learned since this? What is the nuance?
Yeah, I'll steelman his position first. And he did open his monologue by saying, if you don't trust him, if you don't want to own an equity, just buy Bitcoin, take it into cold storage.
Yeah.
Boom. I agree with that. And I think that could solve a lot of people's issues. Even if you think, he's running some kind of game, or Coinbase doesn't actually have the coins, they rehypothecated. Well, in that scenario where that blows up, cold storage Bitcoin is going to be the winner, because that's going to be 500,000 Bitcoin that people thought existed that it turns out it doesn't. So the MSTR equity holders would lose and the cold storage Bitcoiners would win. So fundamentally, those kind of shenanigans would not be a threat to Bitcoin over the long term. You might see a short-term liquidity crunch, et cetera, but it would be actually pretty bullish for people holding Bitcoin in cold storage. Now, Saylor gave two specific reasons as to why he does not intend to publish proof of reserves. First is that proof of reserves without Big Four audited liabilities doesn't really provide any kind of comfort or security, doesn't let you know about the true financial state of the entity. That makes perfect sense. And they're a public institution, so all their financials are already audited anyways. Now, as a Bitcoiner, I don't care about a Big Four audit. I don't like the big four. I like Bitcoin, and Bitcoin is the most transparent audit there is. It's audited every 10 minutes. So, I mean, I'm going to continue to hold strategy, but that's somewhat of a fair response. But the second was it's a security risk. Now, if you're an individual publishing your own personal addresses, that is a security risk because you don't want to broadcast to the world how much Bitcoin you have because it could make you a target for a $5 wrench attack, getting kidnapped, held for ransom, whatever. And you don't want people tracking your coins around, seeing when you spend them. I buy a t-shirt from you, Opti, and I'm using, a 10 Bitcoin UTXO, and you look on chain, it's like, man, Mitchell's got 10 Bitcoin. You never know. So as an individual, you don't want to do that. But when you're a public company like they are, and you're already saying how much Bitcoin you have, and it represents, Bitcoin that belongs to the entities, the company, the shareholders, not Saylor himself, that logic doesn't really follow through because you already published to the world 500,000 Bitcoin. So, and on top of that, we're seeing, like you alluded to, other companies are positioning themselves as, hey, we're going to do proof of reserves. Literally yesterday, Jack Mallers in 21, he published 4 addresses on his Twitter account saying, hey, this is 21's Bitcoin from Tether. This is from Bitfinex. This is from SoftBank, yada, yada, yada. And so other companies clearly don't see it as a security risk. Bitwise, who sponsor this event, I asked them the question they publish proof of reserves. Metaplanet does. Their CEO was in the audience. And so I think ultimately this will leave room for other Bitcoin treasury companies to distinguish themselves and compete. And I think if we, really my goal with this was to spark the conversation. I was pretty neutral on the issue. I wanted to get the conversation going. And I think what we can do is shift the Overton window further and further to proof of reserves, where ultimately it'll kind of look foolish for him not to.
Yeah, totally. And I think you fully succeeded on that, shifting the Overton window, because it went absolutely viral. Everyone's freaking out. And, the response to by Jack Mallers was huge, I would say. And, he's kind of in his own hot water, and he responded very quickly to this. So when this news came out by Saylor, on the one hand, as like a Bitcoiner, is like, yo, just like show the coin, bro. Like show the address. Where's the coin? Do you even really have all that Bitcoin? Which is what a lot of people have been saying. But when you kind of hear his take, though, I don't know if it, kind of chalks up to my muster here. Again, he's playing a different game. I don't understand all the nuance here. It did seem a little lackluster, but when you steel man it a little bit, you're like, okay, like I could see how he's coming from that perspective. But as someone said, and I forget who it was on Twitter, they basically said, like, trusting the fiat system to audit your Bitcoin holdings, like, sounds like a good plan, bro. And you're just like, gotta agree with this one. Gotta agree with that. So, I mean, yeah. I think we covered that. But Mitchell, since that post, do you think he sparked a new phenomenon? Are we going to be seeing proof of reserves from everyone now?
Not everyone, but I think a lot of the important players, they have a decision to make, right? The first decision was, do we actually buy Bitcoin for our company balance sheet? And the second one is, do we broadcast to the world, and do we be transparent about that? And so I think every institution that holds Bitcoin, especially if you're publicly traded and you have shareholders, it is definitely something you need to think about. And another point that I've thought about a lot since this event is, why doesn't Strategy just buy their own custodian or build their own custody solution, right? This is my, speculation. I don't have any inside information, but I imagine Saylor has his custody. Well, we know it's outsourced to a third party. It's Coinbase, probably Fidelity. It's probably BitGo. It's probably scattered across a couple different entities, and it could be more of a logistical and technical headache to get all the addresses sorted out and everything, and make sure all the custody is in nice one clean dashboard. And I think he was caught off when I asked him the question. He wasn't prepared, and that's just kind of like what came to his head, when really it's more of a logistical challenge. So I think a lot of the concern, from a shareholder perspective, could be alleviated if Strategy did in-house custody. Even if they didn't publish the addresses, that's just one less intermediate party between the shareholder and the Bitcoin, and it would diminish risk greatly.
Yeah, I mean, I think we saw, if I'm remembering correctly, oh no, I think I was thinking of BlackRock. Obviously everyone gives Saylor some shit about holding all his Bitcoin at Coinbase. But I was thinking that, didn't he come out and say that he also used Anchorage for his custody? But that was BlackRock that came out and said that. So who knows? Who knows what's going on behind the scenes? But it definitely sparked some outrage on the timeline. And of course, a very solid response from a lot of the Bitcoin companies, which, I don't want to say align better with the Bitcoin ethos, but it is going to show that I think as Bitcoiners, we are going to see just a fundamental shift on how corporations and institutions, handle their finances. It will be more transparent. That's the beauty of Bitcoin. So, Saylor maybe at this point does have some concerns. Maybe you're thinking, they're viable concerns that give them a little bit of leeway. But we're seeing other companies do the opposite. So I think this really goes back to I'm being reminded of the Hal Finney quote. He said there will be fractional reserve Bitcoin banks and there will be full reserve Bitcoin banks, and the market will figure out which banks they want to use. Not saying that Saylor is rehypothecating or fractional reserve any of that Bitcoin he holds, but the market is yet to find out. Like, these new Bitcoin treasury companies are brand new, essentially. This is a whole new phenomenon. It's catching storm. And I think one of the things we've been saying on the show is like Bitcoin treasuries do seem to be taking the hype away from altcoins, and they may be the new, ICOs of this cycle. And I don't think it's going to be Saylor, because it looks like he stacked his debt and leverage in a very creative and smart way. But we will be seeing, I think, some Bitcoin treasury companies that blow up in the next couple of years, because they have to differentiate themselves from each other. Some people are going to take more leverage, more risky leverage. And at some point, some of these will blow up. Hence why we're always like, safest place to be is Bitcoin in cold storage. Just keep it simple, bro. Don't get greedy out here and try to go for the 20x gains when you can get a 10x gain. Like, what are we doing here, man? Let's keep it simple and stack Bitcoin into cold storage. So crazy stuff.
And I think some of them will blow up, and you have to, if you don't want to sit here and be a financial analyst and do due diligence on each and every one of them, like you said, just buy Bitcoin, hold it in cold storage. It's going to millions of dollars. That should be enough for anyone to live a comfortable life. But if you are, if you're a finance dork, dive into these, figure out which ones are legit, because unlike altcoins, which are all scams, Bitcoin treasury companies are legitimate entities. They're bringing capital into the Bitcoin world. They're increasing Bitcoin per share, which means they're increasing shareholders' directional exposure to Bitcoin. I think they're a key player, a key piece of the entire Bitcoin story, especially this sort of era, this epoch we're in. So I wouldn't dismiss them entirely, but you definitely have to be careful, especially as the market starts to get a little frothy.
Totally, man. Totally. As we kind of said, actually, there's two themes here. One, Bitcoin's going to eat up all of these huge capital markets. And two, everyone's trying to find creative ways to get your Bitcoin. So, two things can be playing out at once. Bitcoin's going to a ridiculous price point, and they're going to find ways to, separate you from your Bitcoin. So it's no time to not keep your head on a swivel. If now it's probably becoming more important than ever. So things are getting wild. Anyways, Mitchell, before we wrap up the show, I want to give you the, final couple minutes. What's the last message you want to send with the people? And then we'll wrap up today's show.
Yeah, the last message would be accumulate Bitcoin into your cold storage. You can see this big shiny Blockware sign behind me. We make Bitcoin mining accessible to everyone. And with Bitcoin being this new benchmark, you want to outperform it, but you also want Bitcoin in cold storage. And so, buying these treasury companies is great, but how often are you denominating that trade in Bitcoin, selling it, sending, wiring those funds to an exchange, buying Bitcoin, taking it to cold storage? Like, there's a lot of friction there. And so we make mining accessible to everyone. It's one way you can outperform Bitcoin over a longer period of time. You don't have to run a machine at your house. You can buy one that's plugged in our world-class data centers, low-cost power, and you can get the Bitcoin sent directly to your cold storage every single day. There's no friction in that. Over multiple years, you're able to accumulate a lot of Bitcoin. So it's a great way to kind of dollar cost average at a discount.
Let's go. All right, Mitchell. Well, and also, it feels funny plugging your book here because, you were so ahead of the curve here, but he's also an author here, The Conservative Case for Bitcoin. And at this point, you were ahead of the curve now. And now we have Wall Street Journal and Wired basically saying, like, look at these crypto bros. But yeah, go check out his book, or maybe send it to your parents or something like that. Anyways,
if you have boomer parents that aren't into Bitcoin, it's a great resource for them.
Exactly. All right, Mitchell. Well, thanks for coming on. One of my favorite Zoomers. I think your future is bright, my friend, and you're absolutely killing it. I guess I find yourself in some more viral moments. I don't know how many times you can ask Saylor about proof of reserves, but I'm sure we'll hear more about what you're doing, Mitch. So thanks for coming on, man. And also, I think we did a pretty good job with just one host and our guest today. So new things trying. Anyways, Mitch, let me pull you behind the scenes and I will wrap up today's show. Hang out for 30 seconds. All righty then, guys. So this was Thursday, June 5th show. I think it was episode 1260. Of course, I'm your host, Optimus Fields. Nico will be out tomorrow as well. He is doing some interesting stuff, has to get on a plane. So we're going to be holding it down here, I think, for a couple of days, guys. So you're stuck with me, I think, until like Thursday of next week. You got a week of Opti shows. So, if you don't like me, tune in a week from now and we'll get it back to normal. But you already know we're going to get bullish and we're going to have some fun. On that note, guys, good to see you, and I will see you tomorrow. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.